This new crypto rule that just came out will be massive, bringing companies like Apple, Amazon, and Google to buy more, which could be the last opportunity to get crypto cheap. And is Ethereum about to get a huge boost from institutions? This is your Altcoin Buzz News. Hey, what's up, everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when I drop your latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. We've just published our detailed launchpad strategy. There's a hot new IDO launching that we intend to participate in. Get exclusive details in Altcoin Buzz Alpha. Introducing Altcoin Buzz Alpha. Now, manage your crypto portfolio with regular updates and top insights for only $15 a month. Get hot Web3 trends, undervalued crypto gems, daily portfolio strategy, and responses to your crypto queries. For more information, check out the links down below. Bitcoin price action suggests the asset remains in a precarious position, and a recent report from Ark Invest says that short-term Bitcoin investors had no choice but to capitulate in August as the percentage of Bitcoin supply and profit fell by 14%. Although many traders view significant price dips as buying opportunities, at this point in the Bitcoin halving cycle, a notable bearish move was Bitcoin's price falling below its 200-week moving average for the first time since June 2023. Despite the rather dismal short-term outlook for the crypto market, a more optimistic view of Bitcoin's dip below the 200-week moving average highlights the fact that dips below the realized price in the long-term moving average presented cyclical buying opportunities. Investors who accumulated when the price dipped below both metrics in 2019, 2020, and early 2022 found themselves in deep profit within the next 6 months. Analyst Ben Lilly recently alluded to a similar occurrence within the Bitcoin dominance metric, suggesting that Bitcoin is about to take the driver's seat again. According to Ben Lilly, in terms of price action, right now I see a lot of similarities to what took place in 2019, and it has me anticipating a trend to unfold regarding Bitcoin over the next few weeks and possibly months. It has a lot to do with Bitcoin dominance, which is a measure of Bitcoin's market share of crypto based on its market cap. In the chart, we can see that the rally in 2019 started back in 2018 when we got a nice double bottom, which is the red box, followed by a solid run up to Q1 2019. Then we trended down for a few months before getting the massive reversal on April Fool's Day. Comparing market participant sentiment from 2018 and 2019 to the current market sentiment, Lilly suggests that today's price action reminds him of the pre-reversal period in 2019 when we were in a winter, everybody was low energy, nobody cared about Bitcoin or crypto. Yesterday, new game-changing rules were set in place for Bitcoin and crypto accounting for companies that will drastically change how Fortune 500 companies handle crypto in 2024. The Financial Accounting Standards Board introduced new accounting rules that will allow companies to use their fair value accounting method. Fair value accounting means that a business can measure its liabilities and assets at their current market value. This is huge for people like Michael Saylor, saying fair value accounting is coming to Bitcoin. This upgrade to accounting rules eliminates a major impediment to corporate adoption of Bitcoin as a treasury asset. Companies will be required to report their Bitcoin holdings at fair value, reflecting the most current value of the asset. This includes capturing value rebounds after price drops. These rules will be effective from 2025 on, but companies can choose to adopt them earlier. Companies have been using the American Institute of CPA's practice guide, which treats Bitcoin as an intangible asset like trademarks or copyrights. This method does not allow for adjustments if the market recovers after a dip. Fair value reporting will give investors a more relevant view of a company's financial position regarding their Bitcoin holdings. Before, they could only update their holdings if price went down, but not back up, making companies' holdings seem worse than they are. This will make it much easier for companies to hold Bitcoin and ETH on their balance sheets, meaning more companies like Apple, Amazon, and Google are likely to buy crypto, which is bullish for the long term. Cathie Wood's Ark Invest moved to establish America's first spot Ethereum ETF on Wednesday, according to a filing with the Securities and Exchange Commission. Dubbed the Ark 21 Shares Ethereum ETF, the application resembles those for spot Bitcoin ETFs that were recently delayed by the SEC. The regulator said last week that it needs more time to decide on several ETFs, following Grayscale's recent courtroom victory. Ark Invest named Coinbase as a custodian in the application, meaning the crypto exchange would hold on to Ethereum that's backing the shares of Ark Invest ETF. The ETF itself would be traded on the Chicago Board Options Exchange. The SEC has received multiple applications for futures-based Ethereum ETFs, but Ark Invest's bid resembles a step beyond that, considering futures-based Bitcoin ETFs have traded in the US since ProShares launched on the New York Stock Exchange in 2021. 2 years later, futures-based ETFs seem like a logical place for Ethereum to make its Wall Street debut. Anticipation has grown that the SEC could approve a wave of Ethereum futures ETFs as soon as October. According to Bloomberg senior ETF analyst Eric Balchunas, other companies are likely to follow in Ark Invest footsteps quite quickly. He said there are probably more applications coming if they aren't already imminent. As we mentioned yesterday, the ETH Futures ETF could be bullish for Ethereum because leading up to the Bitcoin Futures one 2 years ago, Bitcoin rallied 60%. However, with the ETH Futures ETF, they won't actually need to hold ETH. But now with the ETH Spot ETF, they will, which would be great for ETH long term, with lower barriers to entry, less risk as investors can insure ETFs against theft or loss of crypto, and higher confidence in it as it will be regulated. Elio Trades on Twitter recently wrote if Bitcoin hits 1 million, it's likely that ETH will break 50k per coin. The 0.06 to 0.08 Bitcoin range that has been in for multiple years now would imply 60 to 80k. Call me nuts below, but this is just multiplication, which I thought was pretty funny timing because of the current market sentiment and knowing how people would react. Elio then followed up by saying, okay, I get it, you're all bearish. So now we'll just have to see how the SEC feels about this. In recent interviews, Gary Gensler has been hesitant to talk about whether or not ETH is a security.
Is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in the
asking
middle,
about one.
The public is anticipating a profit based on the...
I'm asking you a specific question, Chair Gensler.
But before he was chair of the SEC, this is what he was saying.
Over 70% of the crypto market is Bitcoin, Ether, Litecoin, Bitcoin Cash. Why did I name those four? They're not securities.
According to recent data from Sentiment, XRP saw a significant surge in activity and utility in August. This development comes amid Ripple's legal battle with the United States Securities and Exchange Commission. According to Sentiment, the on-chain transaction volume on the XRP network reached an all-time high of 4.8 billion tokens, with circulation also hitting a record of 2.03 billion. The positive metrics can largely be attributed to the enthusiasm of XRP whales, who have increased their holdings over the past few months in the anticipation of a Ripple victory against the SEC to demonstrate that XRP should not be considered a security. As of July 20th this year, 221 addresses held between 10 million and 1 billion XRP, totaling 16.13 billion XRP, valued at about $8.71 billion at 56 cents per coin. Additionally, Sentiment reported a significant increase in development activity surrounding XRP, indicating strong adoption by developers. According to an announcement from SBI Holdings, SBI Remit Co. will be the first in Japan to use XRP as a bridge between two legal currencies. SBI Remit Co., which handles remittance services for Japan's SBI Group, is set to begin providing international remittance services using the crypto asset XRP to bank accounts as soon as this month, saying by using XRP as a bridge currency, you can transfer money quickly and at low cost. Furthermore, it has excellent scalability, allowing users to easily send money to Ripple's partners around the world, and we believe this will lead to stronger competitiveness in the international remittance business. XRP has been sitting around the 50-cent mark lately after retracing the full move made following the XRP versus SEC lawsuit partial victory. As the broader crypto market has gone down, XRP has followed, but the XRP army is one of the strongest communities. XRP analysts have recently given price targets of $15 for the next cycle for a 2,000% gain. If XRP does get more concrete regulatory clarity and becomes used by banks and institutions around the world, it'll be interesting to see where it could go. We also just posted a video on 2 altcoins that crypto investors need to know about before the 2025 bull run, linked down below. According to on-chain data, Chainlink Shark and Whale addresses have accumulated $10 million worth of link just over the last 3 days. As of now, there are 3,127 wallets within this tier, marking it the highest count since December 3rd, 2022, and over the last 3 weeks. Chainlink's on-chain data has been showing good development with renewed investor interest in the altcoin. Another positive development for Chainlink is that despite the current price surge, investors are not looking for any profit booking. Instead, the exchange reserves for Link have been dropping. Over the last 3 weeks, Chainlink investors have withdrawn nearly 1.8 million Link tokens. The whale interest in Chainlink has suddenly shot up after the Swift network announced on August 31st that they have successfully conducted tokenization tests in collaboration with Chainlink, Citibank, and other financial institutions. You can also buy, sell, and trade Chainlink's Link token with our partners at BYDFi. It's a no KYC exchange where you can trade there with only 0.6% features and 0.1% spot fees. To make your trading journey easier, we'll also be giving away our free trading signals for BYDFi tokens. And to get started quickly, you can receive up to $213 welcome bonus, together with up to $1,500 deposit and trade bonus. Just click the link below to find out more. That's it for Altcoin Buzzy's update. I'm your host, Cody Buffington. Thanks for watching.